What's up, everyone? It's Karthik with MoneyVest. So markets just opened pre-market here, and as you can guess, we are selling off quite aggressively. There's absolute bloodbath in the markets here. Pre-market volatility, so which is the VIX, up over 50%, trading up to over 35 at the moment, and our very own MoneyVest index is now down to 3. But I also mentioned in the community that without two very important variables that are not yet updated because the markets are closed, the MoneyVest index is estimated to be around low 3s. But as soon as the markets open, and after we get those two variables accounted for, my estimation is that we are going to be sub 3 for sure, closer to 2.75. So I'll keep you guys posted with where we are in the Discord. I'll update everyone. And I also want to mention that if you want access to my entire shopping list, so this right here is going to be a video which I posted for everyone on July 25th. So I posted this last week, my entire shopping list of over 37 stocks and ETFs that you can take a look at with specific buy targets. I've got a light buy target. We've got heavy buys, aggressive buys, no-brainer buys, including my fair values on individual stocks. You can take a look at. So this right here is going to be available for everyone. I've kind of laid it down perfectly over here that you can take a look at, including our fair values on individual stocks as well. So all of that is going to be available with the link down below. If you want to join, there is a 16% annual discount available until the end of this month. So first things first, let's talk a little bit about what is going on. So I essentially shared an entire update in our text analysis channel that I'm going to read through in this video to help you understand what is going on. So this is an exhaustive list. So this is a full exhaustive list of why we're seeing this bloodbath in the market. Number one, there is a carry trade from Japan. So what that means is, of course, the Nikkei is down over 10% the last time we checked. So if you come over to the Nikkei, you'll notice that the Japanese Nikkei 225 is down over 5.5%, starting to recover just a little bit, but it's still down quite aggressively from its highs of well over 42,000, down a little bit over 22%. At one point, it was down almost 30%. So what's really happening here is that as most central banks in the world are looking to cut interest rates, right? So as inflation was a big problem for the global economy over the last couple of years, interest rates are finally getting cut after being raised extensively over the last 2 to 3 years. So European Central Bank, Christine Lagarde, Bank of America, Andrew Bailey, they have all lowered interest rates more recently, and the Federal Reserve of the United States, Chairman Jerome Powell, is also expected to cut interest rates in September, right? So it's anticipated to lower interest rates. However, while all of this is happening, there's one big bank, which is Bank of Japan, and they are actually raising interest rates. They raised interest rates last month due to significant amount of deflation. Stagflation is what they're experiencing in Japan. And due to this rate hike, the yen and the USD correlation has also spiked. So what you'll see over here, if I essentially break down the interest rates over here, you'll notice that Japan was one of the larger economies that increased interest rates, along with Russia increasing by 2%. But for the most part, you'll notice that most countries have lowered interest rates. Yeah, right? So we got Switzerland over there. We've got the England, we've got European Central Bank, most European countries. We've all seen interest rates getting cut. But Japan over here is raising interest rates by 25 basis points as of July 31st, 2024. So quite literally just a few days ago, we saw interest rates go up. And what this essentially triggered was, if you come over to JPY, which is the which is the Japanese yen, compared to the US dollars. If you come over here, take a look. This is the huge spike that we have experienced in the Japanese yen against the US dollar, up almost 13%. So coming back to this update, yen has appreciated against the US dollar by over 12.5%, as I just showed you, in the last 3 weeks. And the problem now is that due to lower interest rates in Japan, because Japan had such low interest rates for such a long time, you can see that over on this chart. So if you come back, the first chart I had was for BOJ, so that's the Bank of Japan. You can see how low interest rates have been since 2007, 2008. This right here is how we're going back as far as, and you'll notice that they have pretty much stayed sideways, and this is literally close to 0%. But this right here is the more recent spike that we have seen of 25 basis points. So what really people did was they took advantage of what's called an interest rate arbitrage. So interest rate arbitrage is nothing but an idea that they borrow low and they invest high, right? So you know how you buy low and sell high for stocks? there's also a trade for interest rates that you can create. And so as interest rates were low in Japan, many traders, investors saw an opportunity for interest rate arbitrage, borrowing cheap in Japan, investing in the US, whether it's stocks or bonds, right? So pure play of rate differential between borrowing rate in Japan and earnings rate in the US Treasuries. Another way to show you this is actually quite crazy, because if you come over to US 10-year Treasuries, and then if you divide this number by JPINTR, that is going to be your Japan interest rate, and you hit enter. Take a look. Oh, wait a minute. So US, actually I did USD 10Y. US 10Y divided by JPRINT or JPINTR. That was the number. Okay, so if you hit enter here, there you go. So now you've got this screenshot. Now you've got this over here where that differential was incredibly profitable. This is the difference between the interest rates in Japan with the interest rates in 10-year treasuries. So that's the differential that I'm showing you, which was as high as 47%. And this number has been at 47% since March of 2024. Right? So it's of course been very, very high. And more recently, though, you'll notice that this differential collapsed by over 60%. So this right here is the sell-off of over 63% in this interest rate differential between interest rates in Japan and over in the United States for 10-year treasuries. So that's the exact screenshot that I also shared, talking about the rate differential collapse by over 63% after the BOJ rate hike. See attached screenshot showing you the difference between Japan interest rates and the US 10-year treasuries. The spread was 41%. That was the spread at one point, as I showed you, collapsed to 15%. And now that the debt is coming due for most investors and US stocks and bonds are falling, this is a problem for most traders and investors as they get margin called on their debt. Not only that, the yen appreciating against the US dollar. Now these traders also face massive conversion losses, because now that you are converting your USD back to Japanese yen, you're doing it at a higher rate because Japanese yen has appreciated against the US dollar. And now it is going to be more expensive for you to repay the debt, and also more problematic as they convert their USD to JPY to pay back what they borrowed. And this is good for long-term investors, right? So as this is a huge short-term panic and opportunity in the markets now. So that's why I mentioned that I do smell an opportunity here. So also the second reason is recession fears and war and political unrest. So as unemployment rates accelerate to over 4.3%, there is significant fears around recession and accelerated unemployment in the US. And as a result, stocks are dropping hard. You combine with the fears related to war and political unrest in the Middle East, and you've got a recipe for disaster. But as I said, I do smell opportunity here. Declining investor sentiment, confidence, and deleveraging and rinsing out of the margin. So those are some other reasons that I believe the markets are selling off quite aggressively, is because investor sentiment and confidence is in the toilet right now. We're seeing panic all over the place. There's a lot of fear in the markets. And we as a community, I think it's really important for me to address this message that we as a community at MoneyVest need to be more calm, composed, and patient and rational. This is a short-term panic, and once we rinse all of the leverage out of the system, all the trades with margin will get forced out, the markets will stabilize, selling pressure will exhaust, and we can patiently scoop up huge bargains and deals. So relax, let the prices come to you, take advantage, and use this opportunity to buy stocks you've always wanted to accumulate. And if you need help with figuring out, where to buy, what to buy, make sure that you do your due diligence, of course. But we have a whole list of stocks that we are looking to accumulate during this market sell-off, as presented in this entire video of my 37 stocks and ETFs that I'm looking to buy. So my entire shopping list is available with the link down below on Patreon. So there's going to be a member-only video available, private members-only video that you can watch. So last thing I wanted to mention is that no need to go quote-unquote all in or start using margin. So please be smart during this market sell-off. We don't know how long or how severe this could get. So keep dry powder at all times and DC smartly, slowly, steadily, and patiently. So I will be deploying cash this week. As I mentioned, that I feel like a lot of the cash I will have will get deployed here in the markets this week, as I mentioned in my weekend video. So again, if you want to join our community, make sure that you do that. Link's going to be down below. But the volatility here, of course, at almost 34 with the MoneyVest index dropping down to low threes here. I wouldn't be surprised if it actually comes down to this green territory. And that's where the risk reward is going to start becoming very, very good for us to dollar cost average into. So link's going to be down below. We'd love to have you on board. Let me know your thoughts down in the comment section below. And this is where we are with this entire market sell-off. So again, hope you all enjoyed it, found it helpful. Make sure that you drop a like. Pre-market, of course, we're seeing a lot of selling pressure with Apple here down a little bit over 6.6%. We've got Amazon down a little bit over 2.5%. Tesla here selling off over 4.3%, and then Nvidia also dropping a little bit over 6.4% as well. So definitely a lot of selling pressure. We are seeing some recovery pre-market, but this is the time, in my opinion, to take advantage. So always happy investing. I'll see you all in the next video.